Hello everyone and welcome back. In this video I want to talk about TPL, Texas Pacific Land, because the company just announced a 3-for-1 split. They just did it and the stock price was cut in 3. So is this important? Do you have to monitor this? What does it change? What is the real intrinsic value of the business? Do you have to know this as a shareholder? Do you have to monitor this? And what are the implications? What will be the result of this stock split? This is the topic of today's videos, so you will have some good information about if this is important or not. In case this is your first video, welcome. You are interested in Texas Pacific Land. This is maybe my favorite stock of all time, so of course I'm monitoring the situation. My name is Christophe Noor. I've been investing for almost a decade now, and I have achieved a performance of 25% per year. Thanks to TPL, by the way, because full disclosure, I bought TPL back in the days in late 2020 at stock split adjusted price of what, $80, $70, and I sold at the absolute top. So the absolute top, if you adjust for the split, should be 550, something like this. Okay, and now I'm eyeing to buy again TPL because I think the stock has dropped substantially. It is getting cut in half, but the business is improving. So the valuation has come back to reality. And I want to show you that this is not the first time we have a stock split. This is not the first time at all, actually, because I did some research on Gemini, that is a very powerful tool for stocks. And the first split the company had was in the 70s, a 2-for-1. And then in 1980, a 3-for-1 stock split. And then in 2007, a 5-for-1 split. And then 2021, they became a C Corp in a Delaware corporation. So nothing really changing here. It's just the trust became a C Corp. Anyway, that's a 1-for-1 split. Then in 2024, 3-for-1 split. And then in 2025, today, the latest 3-for-1 split. It's not the first time the company is doing a split. It's just that the stock price is moving up so much that every time it is reaching thousands and thousands of dollars. And the management doesn't want their stock price to be trading at thousands of dollars. What does it tell you with management? I will talk in more details about this later in this video. So you can get a pretty good idea if this is bullish for shareholders or not. The company is known for doing many stock splits. Okay, this is not the first time. Don't freak out. Is this stock split having an impact? Does a split change the business value? The answer is no. It's just that you are being cut in 3. A stock split is purely a cosmetic change to the share structure. It's like a pizza. If you have a pizza cut into 4 slices and you recut it into 12, you don't have more food. You just have more pieces. So more volume, more shares being trading every day. The math, if TPL was trading at $900 and needed 3-for-1 split, the new stock price is $300, which is the case right now. So all the old videos you will see on YouTube talking about TPL, you have to account for this new stock split and divide the values by 3 every time. And if you are a shareholder, if you owned 10 shares worth $9,000, you will now own 30 shares worth $9,000. So as a shareholder, you have nothing to do. As a potential shareholder, you have some work to do because now you have to account for more valuation. I will show you, because I will show you later in this video, some investing websites are wrong right now. Now I created the curiosity gap. You will have to stay a few minutes with me to know what is wrong. But you have to do some adjustments if you want to value TPL right now. So, the intrinsic value of the business model, TPL's value is driven by royalties, water rights, and its land. None of these assets produce more cash just because there are more shares in the wild. This is just a cosmetic change. This is the key takeaway here. By the way, if you want to become a better investor and improve your performance, I have a coaching program. It gives you the exact method I've used to generate 25% per year for almost a decade. More on that at the end of the video. So, why is the management team pursuing stock splits. Why do they like having stock split? If it doesn't create real value, why bother? First of all, let me tell you that the management team of TPL has a bad track record. The management team of TPL is known for being complacent and doing many bad things, making many mistakes, and they always want to do stock split and issue more shares to do some stupid acquisitions. Okay. Also, they are focused on the short term. So the first point is this. At $1,000 per share, it's harder for smaller investors to build a position. If a stock price, you can look at AutoZone, for example. The AutoZone is a company I have in my portfolio right now. The stock price is $3,000. If you have a broker and you can't have fractional shares in your broker, the only way to invest in AutoZone is to spend $3,000. Some people have a small portfolio. Some people don't have $3,000. Some people have a small portfolio like $10,000, $10K. But if they buy one share, it will only be 30% of their portfolio. Like if you buy one single share, it will be a huge amount of your portfolio. So it limits your ownership. By having a high stock price, you remove small investors. Most of the time, small portfolios, small investors are young, unsophisticated, maybe more illiterate when it comes to financial literacy. They don't have the emotional wisdom to hold shares for the long term. So by choosing to have a high stock price with a high price, you can focus on a serious shareholder base that is richer, wealthier, older, wiser, more focused on the long term. It's subtle, but it's real. If you focus on all the companies with a high stock price, they can choose their shareholder base. TPL is doing the exact opposite of this. They choose to attract younger people. They choose to attract unsophisticated investors with more emotions, gamblers, speculators. You will be astonished to learn how few people understand the concept of market cap. I have a coaching program, right? I help people outperform the market. And I receive calls of people that want some help. And some people only look at the stock price. And you will be shocked to see how many people judge the performance of an investment, not because of the market cap, but because of the stock price and the performance of the stock price on a monthly basis. People only look at what is in front of their eyes, just the stock price. And they say $60 is cheaper than $1,000. Two companies, two stock prices, and the only way they value companies to see if the value is cheap or expensive is not by looking at the PE ratio and price to free cash flow and the market cap, etc. They just look at the number. They say this number is smaller than this number, so this stock is cheaper, so I buy this stock. Well, if you are in this situation, I will introduce to you the concept of market cap, which means you can have a stock price of $60, but you have to multiply this by the amount of shares. $60 times the number of shares, it creates your market cap. And the only way to value a company is by measuring the profitability of the business compared to the market cap, the market capitalization. And you will be shocked to see the number of people that don't understand this concept. So they will be lured, they will be seduced by thinking, yeah, the stock price has just gotten cheaper. It's now only $300. I can afford it. This is fine. So I don't like this at all. I don't like stock splits at all, actually. And TPL, one, has a bad track record for the management team. Two, they do these kind of behaviors, and I don't like this at all. So I don't like this split. I would rather have the old TPL stock price of being worth thousands of dollars, thousands and thousands of dollars. It will prevent the kind of investors you don't want to have. to invest in the stock. Anyway, so now the stock is $300. You will have much more liquidity in the system. As an investor, is liquidity important? If you are a short-term gambler, yes, liquidity is important. A high volume of stocks being traded every day in the stock market is important. If you are a long-term investor, liquidity is not important. Not important. So I don't want liquidity for my stocks. I don't care what is happening on a daily basis. I don't care what is happening on a weekly basis. I'm thinking month. I'm thinking years. I want to invest in TPL and have the stock price grow for the next 5 years. I don't care if this is liquid on a daily basis, weekly basis. I don't care at all. So a second argument why I couldn't care less about this stock split. I'm not a fan at all of this move. And people celebrating a stock split, maybe they are in the first basket of investors that don't understand the market cap. Also, you have an institutional mechanic. More shares usually lead to a tighter bid-ask spreads, making it cheaper and easier for big funds to trade without moving the price. It's a little bit complex. You have another layer of complexity about stock options in the management team structure, but I won't elaborate on this. Basically, if you have a cheaper stock price, if you have more liquidity in the system, it's easier to manipulate the stock options. It's easier to pay bonuses to your employees. But it's a little bit too complex, too advanced. I don't think it will be helpful to elaborate on this one. But for this stock split, all the benefits are for short-term investors and the management team with nice bonuses. And all the drawbacks, all the bad things are for long-term investors. So as a long-term investor, I dislike this 3-for-1 stock split. Now, you want to adjust your price target. I made a video a couple of days ago. What is my price target for TPL right now? And my result was pre-split when the stock price was trading at $800, $900. I said my price target was roughly $750 pre-split. So now you have to adjust for your new price target. You have to divide everything by 3, which means the new target price for me, for TPL, is $250. And now we are at $300. So I am not a buyer of TPL after the stock split. And actually, to go from 300 to 250, that's 5/6. The stock price needs to drop 16.66666%. So basically, I need the stock to drop 15% to start buying a position. I will not buy a full position at 250, but I will start buying. Okay? So yeah, it needs to drop a little bit more, and it has not reached this level since 1.5 years, August 2024. It's possible. The stock is very volatile. A couple of days ago, the stock dropped immensely to $270 and then rebounded to $310 and then back down. The stock is extremely volatile, and it has been the case for many months now. People are celebrating too early for TPL. People are celebrating when the stock price goes up, and people are crying when the stock price goes down. Long-term investors wait to swing big when we are in our target price. So for the moment, I am not buying. And now, if you want to do your own target price, you can use several websites, but the websites are long, too slow to adjust. For example, the best stock unlock, the best DCF model out there is on the website called Stock Unlock. I'm using this DCF model on a daily basis, and I recommend you do the same. I have an affiliate link in my description to get it 10% cheaper. So if you want this wonderful DCF model, click the link in my description, use my link to use Stock Unlock. It will get cheaper. If you do a DCF model and you forecast the earnings, you will get a 15% growth rate in earnings, and then you assume a PE ratio of 30. it will give you an extremely optimistic scenario because stock unlock will take a couple of days to adjust for this stock split. Okay, so as a warning to my audience, be extremely careful when you make a DCF calculation right now, because investing websites will take a couple of days to adjust for the number of shares. All the financial websites will be wrong for a couple of days. Okay, you can look at my old videos with the same assumptions. We will get different answers. Now, if you have these assumptions of an earnings growth rate of 15% and a PE ratio of 30, the fair value should be $800. And if you adjust for the price, now it's $300. It's more than a double. And if you buy right now, you can expect a CAGR, a compound annual growth rate of 34% per year. It is wrong. Be extremely careful, guys. Don't buy because of this. The formula is wrong. And you have to wait a couple of days because the number of shares has to be adjusted. If you look at another website, Fiscal AI, you can also use my affiliate link, by the way. It will get 15% cheaper. So you see me navigate between these two websites. You have both links in my description. Click the link, test it out, see if you like the format. It will get cheaper if you go through my link. So please use my link. I'm using these two websites on a daily basis. If you click on the diluted weighted average shares outstanding, the number of shares, you see the trend is going down and you have 23. Same thing for stock unlock. You can check the number of diluting shares. You have 23. So 23 million shares is wrong. Stock unlock is wrong. Fiscal AI is wrong. It will take a couple of days, maybe a couple of weeks to adjust this. But I mean, you can ask ChatGPT, you can ask Gemini. Following the 3-for-1 stock split, you have 69 million shares. Before the split, it was 23 million. You multiply everything by 3. So this, which means the DCF is wrong on stock unlock. All the DCF models you will see online are wrong. You have to multiply the number of shares by 3. Okay, I hope that's clear. And for some websites, you can adjust the number of shares, or you can just wait a couple of days actually, and it will adjust. But be extremely careful for the DCF and the valuation. I just wanted to make this quick video so my subscribers are not making this mistake. The 3-for-1 stock split is not something that I'm happy with, but this is life. And TPL is still great. So I will still monitor TPL and still buy it when the stock price drops. Be extremely careful with DCF models. Be extremely careful with the valuation. Act with discipline. This is how you will outperform the market. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.